Hey everyone, welcome to our latest Resolve Riffs. Before we begin, it's good to just let everyone know that this is for entertainment and informational purposes only. Caveat emptor, do your own research. This is not investment advice.
Amen to that, Richard. We are definitely here to have some fun and really have some behind the scenes conversations, things that you might hear that happen at a happy hour in a conversation that I've had with amongst these various gentlemen at many times, some poolside. Well, all of you, I've probably had a poolside drink with a time or two, but really happy to welcome Ross here. Financial consultant for 401stc, director community of Altruist investors, the Human Advisor podcast, a great podcast. If you haven't checked that out, an Olympic trials qualifier, so a high level athlete. He knows what it's like to win and lose.
Mike, your signal went out there a bit. So Tyrone Voss, just to as soon as you're telling everyone the guy's name, it went off. So yeah, Tyrone Voss here, as well as Shaun Cumby. You want to, Mike, introduce Shaun?
And are you guys hearing me or no?
You're back.
I'm back.
Island,
all right.
Yeah, Island Network.
I apologize. I'm having a little bit of network difficulty, but we'll work through it. You guys hear me now or no?
Yeah.
What's happening?
Okay. Shaun Cumby, He's worked at Resolve in the past, been our head of futures trading. He's had billion-dollar books at his disposal, and also launched a crypto asset fund, a Bitcoin fund in Canada, on the exchange, on the TSX, prospectus listed, and the whole 9 yards. So something that leading edge for Canadian investors, again, like they were with ETFs. There's an investable vehicle for investors in Canada to consider at least the crypto asset universe. So I have no idea if you guys can hear me or not.
Yeah, we can. Loud and clear, man. Show us your drink so we can actually get that out of the way. I'm actually going for a COVID-free Corona. Cheers.
Whoa.
Tyrone, athlete with his water. Shaun, what are you drinking?
I'm the
Negroni, gin, Campari, and Martini Rosso.
Not bad.
Amazing.
Not bad.
Yeah.
All right, Mike, what's the topic today? I guess we're talking about crypto.
Well, you know what, and hopefully you're hearing me. But when we get a lot of interest, I personally have a lot of interest in this new frontier asset class that is crypto assets for a number of reasons. And I think that generally in the world of financial ongoings, investment advice and whatnot, not this investment advice, investment topics, I think this is a pretty big topic that is an up and coming topic. And this is for me that it's up and coming. And so when I think about two guys who have actually been on the leading edge of this curve, who have invested significant time and money and effort into understanding this particular frontier asset class and committing to that asset class early on. This is years ago. Shaun and Tyrone came to mind as two leaders in this field. And really, we wanted to just pick your brain in an open discussion, no products, but lots of knowledge, lots of insight. What's happened over the last 2 or 3 years as you guys have gone in the journey? What were the things that came to mind? Like, how did you make that commitment so early on to really sort of more fully jump into this opportunity or this idea, if you will, and just, maybe walk us down that journey a little bit?
Guess I'll defer to Shaun.
You want me to go first?
Sure.
Oh, okay. I was working for a quant hedge fund and loved technology. Heard about Bitcoin, late 2009, 2010. Couldn't really get my head around it. Remember it going through $10, then $100, then $1,000, and I was like, okay, I'm going to pull back from 1,000, set up my application for Mt. Gox, and it literally got hacked. Like a couple weeks after, I was still waiting for my account to be approved. backed off, and then
Lucky break.
yeah, better lucky than smart sometimes, but got involved with the company I'm with now, invested in them in 2017, and Bitcoin just took off. The underwriters they were planning to do a Bitcoin fund at that point in time, and the underwriters were saying we might raise $200-300 million for you. And so I called them and I was like, "Have you ever traded $200 or $300 million of anything?" And they were like, "Well, no." And I'm like, "Okay, I'll be in your office in 15 minutes," because that was kind of my bread and butter when I worked at TD Bank. And then just got more and more involved, and then sadly had to leave Resolve due to conflicts of interest, and been working there since February of 2018, trying to get a Bitcoin fund listed on the Toronto Stock Exchange, and it finally happened in April.
That's awesome. For me, it was
what a journey that was.
For me, a little different path. So I want to say it was right around 2015. I had a friend of mine who was, he was the one when we were growing up who was always tinkering with computers and making our fake IDs and everything. So right around 2015, he had mentioned Bitcoin, and I always, anyone in this space has two lives, right? One when you heard about it, and then the second one when you actually took it seriously and went all in. And finally, he convinced me to download an app called Bread Wallet, and he sent me some, and I was like, wait a second, this is different. And then he was like, well, I'm going to give you an address, send it to this address. And it was a third person, and I sent it to them instant, right? And again, if you're a financial advisor and you work in financial services, you realize how long everything takes to settle and clear and do all of that. And then also growing up poor in an unbanked home, I realized the power of what that's going to do for folks to not be a part of the banking system. It immediately clicked. I'm like, this is, imagine if my mom and dad had this growing up. There's no payday loans, no check cashing places, no money orders. This is incredible. But I still didn't read the white paper. So he puts me in this Facebook group chat with, to this day, some of the smartest people I've ever come across: cryptographers, computer scientists, data scientists, the whole deal. And I'm looking at the conversation, and there's all these fancy terms, SHA-256 and oracles and mempools. And I'm like, all right, there has to be something. And I started to see they're giving each other some terrible investment advice. And I'm like, bing, like that's where it is. And that fall, I had a chance meeting with Howard Lindzen. Some folks may know Howard Lindzen, who's a pretty notable investor here it's from Toronto, actually, right? Is it Toronto? He's from Canada, but he's known in the FinTwit circles, as we call it on Twitter. And asked him for 15 minutes of his time. He ended up giving me an hour and a half, and he goes, "If you want to be as successful as financial advisor, if you want to be, I challenge you to hang your hat on crypto, learn everything you can, go all in on crypto in the startup space." And I did that then, and it changed my life. And then literally right as I was getting into it, 2017 happened. And then it was like, all right, now it's prime time. You can see all of the mistakes that were made. You can see how financial advisors were completely blind. Most still are. But I was able to add some value, not only to the retail investor, but also to advisors on what this is going to look like moving forward. The beautiful thing is now the infrastructure now is a lot more robust than it was in 2017, but nothing has been built for advisors. The education is not geared for advisors. There's no products, especially here in the US, that are geared for advisors. So now we're in this really weird space where we are the conduit to a lot of retail money, trillions of dollars, but our practices, right, our education, our tools are not set up to be able to handle that. And I'll get into this a little later. I actually had to build a whole crypto practice outside of the traditional markets because everything was held away. And then as I left that world and then continued to build for what I think financial advisors will need in the future, and large asset managers, by the way, it's taken on a whole different realm. And I've been able to, use what I've learned over the last 4 or 5 years to educate not only retail investors, obviously as an advisor, but fellow advisors on the space.
I'm going to just jump into what you just were referring to, how to position perhaps for retail investors Bitcoin in their portfolios. I remember back in 2017 when I saw that this was really gaining some traction and some momentum. I remember reading the Bitcoin white paper and reading some other papers and telling myself that, yeah, I think I got a hang of this thing. And really what I was doing was momentum trading. I was jumping onto that trend that was skyrocketing. I rode it for a little bit, made some money, and then I could tell that, this may have gone a little too far. And ever since then, I think last year I started dipping my toes back in and putting a small position to my portfolio, more of sort of a hedge against an unknown future, something that I don't understand. Because kind of this is where there's such a huge information asymmetry in this space. There's a small group of people that really understand what's going on. And then there's the rest of us that are sort of seeing this mega hype and a lot of flow, and some major big investors talking about how they're positioning it into their portfolios. And that's, I think we'll get into that in a second. But I was curious to see from you, Tyrone, how is it that what's the framework that you use for individual investors, retail investors to add cryptocurrency in their portfolios?
So so my own thesis around Bitcoin is this: it is a long dated call option on a store value. That's my framework. So I don't get into the nuance of, is it digital gold? Is it a store value now? Is it current? Bitcoin is all of those things and more. You can't put it in a box. Once you see it, you can't unsee it. So that's my own personal thesis, right? I don't follow daily price action. It's a long dated call option on a store value. And I think depending on where you sit, it may be a savings vehicle for some. What country are you in, right? Look at remittances. Is that something that you are? If you are a hedge fund, if you are a fund manager, now you're talking about the non-correlated properties and things like that. So it depends on where you are. For me, dealing with a younger client base that is looking at it as, here is something that's speculative. Let's be honest, to them it's speculative. It has some properties of being a digital gold, so they find that exciting. And then it's volatile, so it has that day trading stock feel, but I've never had to pitch it. All the clients that come to me already own it, and they come to me because you're the financial advisor that's not going to tell me to sell it, right? And you also understand cold, hot storage, hardware wallet, multi-sig, decentralized finance, borrowing against it, lending against it, all of these things. So they know that they could come to me. We're always going to get back to financial planning and the basics of a goals-based planning. It always goes there. But right away, their comfort level is, you get it. I know you get it. So I'm comfortable talking to you. But I've never had to pitch it. I've never had to say, well, you're talking about gold. Have you thought about Bitcoin? So they've always come to me already owning it. And then what I try to do, is, to be honest, is try and get them to diversify away from crypto, right?
Yeah, that's what I was going to suggest. Yeah.
Right. They diversify away from it. Now it's like, okay, well, some of the portfolios I've seen financial advisors will bug out. There may be some startup stock in there, some founder stock. There may be some Bitcoin, right? And there may be some Tesla and some marijuana stocks in there. And then there's a whole bunch of cash, but that cash could be USDC, it could be Paxos, it could be Tether, right? It could be a whole bunch of things. So, and that's the beauty, again, and we can get into this later, but that's the beauty of the stablecoin space right now, is that for advisors, they don't even realize that's eventually going to be our money market. So when a client wants to sell down their Bitcoin position and they want to park money somewhere, you're going to do that in stable coins. But right now, financial advisors can't even make that connection. So for me, it's, all right, what do you own? Why do you own it? Where do you own it? How tech savvy is the client, right? Going through a full risk tolerance, another investor and policy statement, time horizon, all of those things. And based on that, now I start to open up the conversation. Is this a trust in the state? The tax planning piece. So there's so many parts to it as an advisor when you're dealing with retail, as opposed to dealing with family offices, pension funds, things like that. But I've never had to pitch it. And then it's, all right, you own too much of it. let's diversify away a little bit. You're highly concentrated, but they don't even know what that means, right? So just a quick example here, but I have a client highly concentrated in Microsoft stock. He works for Microsoft, but he gets crypto and he owns a lot of crypto. And I'm trying to get him to understand, right, concentration versus diversification, and then what that looks like from an overall, right, what it means to be an investor with a broadened portfolio and asset strategy, management strategy, and then kind of help them execute against that.
Yeah, that makes sense. Shaun, what are your thoughts around that, if any?
It's been pretty much the exact opposite of Tyrone's experience. Like we're mostly having to do you understand gold, being in Canada, very gold heavy, like a lot of folklore around investing in gold in Canada, and introducing a lot of people to digital gold. A lot of people, like we've addressed the traditional financial channel. I mean, that's where there's just a ton of money there. And we just wanted to create a simple, straightforward, professional product that if somebody wants to take a position in Bitcoin, 1-2% as an asymmetric return bet for the long term, like we suggest, hold it through 2 halvings. I guess at this point, 1 more halving. It's been a challenge. Like Bitcoin is a challenge. There's just no 2 ways about it. Like you can scratch the surface, think you understand it, and then when you get into it more and more and more, it is just.
How long are the halvings?
Every 4 years, approximately.
Every 4 years. Okay.
We just went through one on May 11th.
So 8-year horizon you're proposing, which is.
Yeah, I think over the next 4, typically, if you look back, 2012, that halving, it was a concept and it went up an insane amount, then pulled back a fair bit. The subsequent halving in 2016 went up 28 times, pulled back 80%, rose up again. We've just passed through the next halving. There's great potential because everything in finance is a trade. You're exchanging one thing against another thing. Most people are exchanging an ownership position in a company. They own equity. To get that equity, they sell US dollars. That's an exchange. Everything's an exchange. So what's going to be the ultimate denominator for Bitcoin in the world's eyes is the US dollar. If they continue to print it, Bitcoin will only get stronger against the US dollar. So it's been a struggle. The product's out there. It's been, we haven't had any Canadian bank dealers in our syndicate, but when we look at the flow of where is our stock going, it's going into the banks, into the bank stock accounts.
Okay, yeah. But do you see it as virtual gold, digital gold into the future? Because when we were thinking about the title for today's riff, this was kind of like a half tongue-in-cheek comment, but it was also, I was looking a little bit at the correlations to gold and to S&P over the last couple of years, and then particularly in Q4 of 2018 and in the first quarter of this year. Mm-hmm. Those are 2 major risk-off events where gold benefited from the risk-off environment, whereas Bitcoin endured quite a bit of a drawdown. So right. Do you think that that's part of this idea that this hasn't really caught on to those with their hands in the levers of power? Like,
well, Bitcoin is still so small, right? Like it's probably less than the cash on Apple's balance sheet. It's just tiny, right? But I like the idea of digital gold. Like gold coins back in the day were actually a currency, like a couple thousand years ago, but nobody uses gold coins as a currency now. But whenever 1,000 years ago, 2,000 years ago, you paid taxes with gold coins and so on. But then as gold became more valuable and the stock to flow made it harder and harder, it became a store of value. And I think we'll see the same thing in the evolution of what is Bitcoin in terms of what it represents to the world. so that people will see it as digital gold, and then potentially literally like the SDRs, right? Like it'll be something even greater. Let's say if Bitcoin's $1 million a coin, the slow settlement times won't matter. Everything will be done fractional. The number of exchanges will be few. And when it's at, you know, twice the hardness of gold and is incorruptible and immutable, it'll represent something that humanity has not yet seen.
You're referring to the special drawing rights of the Bank for International Settlement, right? That's right. The analogy there. Okay. Yeah. What I was getting at, it's because I can imagine Gen Zers, millennials, people that have been born with gadgets in their hands, taking to the technology a lot more. Gen Xers to some extent as well. But I would imagine that people who were born in a time when there was still the gold standard, who happen also still to be those with their hands in levers of power, those with the largest 401ks and Roths and RSPs here in Canada, those who still control the large chunks of money. I would imagine that to them, it's a little harder to jump on that narrative or to embrace it wholeheartedly. Obviously, you have people who have jumped on this, so there are exceptions to that rule. But I would say in general, it's much more the younger generations that may have jumped onto this idea. So do you think that there's also this generational gap, and it'll take a few years, potentially a decade or so, until more of the control of this money is in the hands of people whose minds can wrap around the idea?
I think so. I mean, well, let's look at the numbers. So 30 trillion or so, they said, of assets will pass down over the next 3 decades. You also have the first asset class in history that was led by retail. Retail came in first. Look at Coinbase. If it wasn't for, and actually, let's go back. You look at 0809 when Bitcoin was introduced to the world. Shortly after that, we get the iPhone. Shortly after that, we get the App Store. That 6 months to year time frame there was set up perfect for this. Now you have this crazy bull market for the next 10 years. But Bitcoin was born in a perfect environment, including tech, demographics, everything. Perfect time. But now, to your point, led by retail, everything is on the phone. I can do it through an app. It's very easy, right? And it's not as hard as some people think for you to buy Bitcoin. It's very simple. Cash App makes it very easy, beautiful, and simple and safe to buy Bitcoin, right? So I think people really underestimate where it is for retail. But to your point, because they've grown up with it, back to those demographics, if I'm 25, 2009, right, that was 12 years or 13, 14, I grew up with the phone. I grew up doing everything from here. Whereas boomers, right, who grew up with having to do research and using someone to utilize research and having a fundamental construct around investing and it fitting into this nice, neat plan, Bitcoin isn't that. So, which is why now, again, if you look at pension funds, endowments, all the folks that we're trying to get in, it's a very regimented, a rigorous process before making an investment. And if you look at Fidelity Digital Assets, they just put out a report. And I don't really care about the numbers of the adoption. I never look at those reports for that. What are the concerns? Number one concern, volatility. Young folks could care less. When on that week in March, I think it did March 12th, where Bitcoin dropped 50%, no one call, one text, one anything from a client. They expect it. They understand it. Market manipulation, very important to the institutional side, right? There's still a lot of that. Prime brokerage is lacking. We're getting better price action and liquidity. Needs to be a lot of development there. And the last is a fundamental framework for valuing. Now, I think Shaun and I would agree. I think there's some things there, stock to flow being one, realized cap. There are a few others there, but you can't put that in front of an advisor, right? You can't really put that in front of Howard Marks and go, no, this is it. This should make some sense to you. So I think when you look at all of those things, there's a digital divide, and there, I think there's also this, I guess you could call it a demographics, right, or age divide in terms of where if I made my money and I've set up financially, I'm going to be slower to move to something that may
more
be
risk averse more risk averse.
Right, exactly. It's a fad, right? Like it's speculative. That's how they're looking at it. Where it's like, well, why wouldn't I own gold, right? And I've seen gold and I understand it and it makes some sense. Where younger generation they don't have that same. It's here. It's right on my phone. I'm 21 years old. I can just go in and Bitcoin is there. It's this thing that was in this app that I downloaded, right? Where I also send money back and forth to my friends. So I do think that divide there makes sense. But again, as these assets starts to be inherited, right, and transferred, now you're going to have a younger demographic say, all right, well, this is what I've inherited. I think I'm going to, divest in some of these things, and I am going to put a significant portion into digital assets, in many forms. But it'll be interesting to see how that plays out moving forward.
We had the experience where we went to talk to a very, very large, multi-billion-dollar family office, and they give all of the kids of the family some money to invest in their ideas. And one day, one of the heirs came in and said, here's a ledger with, I bought Bitcoin with my allocation. And the PM was like, whoa, like, what do I do with this? Like, he was afraid to even touch it, and he's like, this doesn't fit with our IT. We don't know how to do the accounting on it. It doesn't fit into our limit models. It doesn't fit into value at risk. And I said, well, at some point, when we get regulatory approval, we'll have Bitcoin with a QSIG, right? And he goes, that's what I want, right? Like, yeah, I get that. I might not ever understand everything about Bitcoin, but I understand now how I can use that for a wealth product. Mm-hmm. And, the other thing to Tyrone's point that I love reading about is like, who are these guys that got it early, right? That it clicked for them, right? Like, and I'm not talking about the
cypherpunks. You meet outside of the cypherpunk group, but that's a small group.
Yeah, even one level past that, like the Winklevosses. What clicked for them?
Yeah,
I'm talking about kind of the old finance guys like Bill Miller, mm-hmm. Michael Novogratz, the macro investor that became an early Ether winner.
Mm-hmm.
Paul Tudor Jones has jumped on it recently.
Well, that's very recent, but like back in the day, like Peter Brigger at Fortress Investment, who's like a super deep value credit guy, like they got Bitcoin way ahead of everyone else. Like arguably they pulled Novogratz into it. And yeah,
that's where he was from. Novogratz was Fortress as well.
From Fortress, and Dan Moorhead, who formed Pantera, and they're like some crazy number. I just love reading the stories about how they saw this early, and took like a small allocation that grew, 100 times in value.
Yeah.
Lessons, and to like Tyrone's point, like the platform of the mobile phone. The one thing I've learned is we want to look for investments that address a global market through software technology delivered on a smartphone. You have a globally addressable market instantly.
Yep.
And Bitcoin is that for money.
Mm-hmm.
But how do you deal? I mean, going back to, I think both of you guys.
All right, I'm back. That's the quietest I've ever been on any of these riffs.
We missed you.
I was killed. We were at when you're at the happy hour, I had to go to the bathroom because I was verklempt. I was choking on a hot dog. I couldn't say anything.
It's that island internet. Don't worry about it.
Yeah, I got it now. I'm on. So go ahead. My apologies.
No worries. I was just going to ask a little bit about the custodial side of this, because I know that this has been a big concern for a lot of people. You mentioned the Mt. Gox hack. I remember buying one of those little digital wallets. I think it's called a Trezor or something along those lines. I remember using it, learning how to use it, all the different codes. And I know that for institutional money, that's one of the big concerns. And so some people have used, I think it's called cold storage. So I'm trying to get a little bit more information from both of you guys. How do you think on the institutional side, Shaun, but I guess on the retail side as well, Tyrone?
Well, I don't know if just before you jump into that, I'd also like to add some context there. So did we talk about sort of the market cap of sort of Bitcoin, crypto yet? Sort of the
briefly,
what is it, 200 billion? in sort of asset of size. And
is that Bitcoin or all the crypto space?
I think it's all the crypto space is 200 billion. So, in the context of the institutional framework, what is the drive towards it? I think I heard you, Tyrone, talking about the Fidelity studies. There's probably 100 people at Fidelity working on this in Fidelity Global. Mm-hmm. So you've got some people working on the problem. I know, Shaun, that's one of the reasons I was looking forward to having you on, because you actually navigated this in the Ontario landscape from a regulator's perspective, and actually got a prospectus-based product that trades at a very small premium to the actual underlying, and allows people to take advantage of this right inside their account. So you've got sort of the retail, and so on the institutional question, what you're seeing is their objections. What's the traction like, and any speculation on either one of your sides, and when do you think the market cap needs to get to? I think a trillion certainly makes it an asset class that to be reckoned with. Has to be reckoned with.
Yeah.
At 200, how does that happen? Are you seeing that coming through with your order books on the Canadian side, and sort of that little bit of context around that? We got a few questions coming through on the YouTube as well, so I will come back to those. So those of you asking questions, keep them coming. We'll get to them.
The last raise that we did that just closed this morning, we saw a much more institutional participation, hedge funds, but also Canadian mutual funds were buying into this round, which is great to see, because we've just said, okay, if we're gonna put this product out there, we want the highest level of professionalism and custody. And we found that with Gemini. We evaluated many. We love them. There are other great guys coming up the curve. But I'm very interested in Tyrone's experience, because, I know one guy who got involved in crypto. He bought a bunch of Ether and then kind of forgot about it, and then was reminded about it. And he looked at his phone and he had $6 million worth of Ether on his phone. And I hear these stories about guys like, I met a guy that mined Bitcoin from early in 2009, which he was on the original cryptography list through 2013. And he got divorced then. I said, did you set your mining rigs up again? He goes, no, but you know what? It didn't matter, right? Like, well, he has everything on like metal cards, and like he's an honest to God cryptographer. But I see these guys that are walking around with literally tens of thousands of dollars in their hot wallet. And I just wonder, like, what do you do when somebody comes to you like that?
Great question. So let's create a framework around this whole conversation. So I'll start with financial advisors to move out. So for financial advisors, it's a very interesting place and very complex, which is why it's a very weird spot for an advisor to be in. Bitcoin is a bearer asset, right? The lore is I can hold it. I can then take that and now I'm in the whole crypto ecosystem. So and I've come across that same thing. So when the clients do that, it's like, okay, well, you want to know, again, their tech savviness, how much are they able to be secure with holding that much crypto on their phones, which a lot of people have that. So you have these SIM port attacks now. There's a lot of issues, right? If they do put it on a hardware wallet, now what do they do with that? Because if they lose that, there's all the crypto. Do they put it in a safety deposit box? So there's a lot of conversations. The main thing that I tell financial advisors is, if you have a client that comes to you and they say, well, I have crypto at Coinbase or Binance or all these other places, you panic a little bit, because you're like, okay, well, Coinbase, in my opinion, is the best house in a bad neighborhood. But as a fiduciary, you want to talk to them about the safest way to do that is to get it off of there. So you want to be able to help them with some custody options. Now, I've had conversations with Gemini as well for some projects that I'm working on. And Gemini is a really good quality source, SOC 2 audits, all that other stuff, really great place for those that understand. For financial advisors, it's Fidelity hard stop. For no other reason, they trust Fidelity. You're not going to convince them that they're going to put their clients' crypto at a startup, right? And that's what Gemini is. It's Fidelity or bust, period. It's no conversation after that. Now there are the great, Kingdom Trust and so many others, BitGo, and we could keep going. It's Fidelity hard stop, because you know what else? I probably custody my brokerage assets, right? Or client or other assets at Fidelity. They just have the trust, and trust matters here. Now go a level higher. When you look at institutions, again, from conversations that I've had, which is interesting here, and Shaun, I'm sure you started to have these conversations as well, is two things: decentralized custody, where atomic swaps, right? So atomic swaps, and then also multi-sig. So when you have decentralized custody, which is coming, which I can't wait for, right? But again, how do you explain that to a financial advisor, or you sit and explain that to Wisdom Tree, or, you would have to explain atomic swaps and then what multi-signature is. And multi-signature is just simply you need more than one signature for that Bitcoin to move. What's missing within the institutional conversation is exactly that. I've had conversations with Wisdom Tree, their head of research, and I asked him, I'm like, you guys use, and I won't say what they use, but this is who you use for custody. Have you thought about multi-sig? Are you familiar with atomic swaps, the instant transfer of assets, decentralized away from you? So maybe it's at State Street, you have some at Fidelity, and then you have some yourself in here with your internal, right? You have a 2 or 3 signature, 2 people have to sign, right? Maybe the client takes some, maybe there's a trust and estate attorney involved. So custody is very, very sticky depending on where you sit, but it's gotten better. There's a lot of really good choices. Like I said, Gemini is really good in terms of their security models and how they actually, they're a qualified custodian. But again, for individual retail clients, that's a very, like, if you buy on Cash App, it immediately goes into cold storage. If you want to take that off of Cash App, now you got to tell that client, okay, well, these are your Treasure or Ledger, right?
How does that actually work, though, the cold storage? I understand that the hot wallet is just something that's online, that it's susceptible to hacking. But the cold storage is just basically something that's taken into a kind of a hard drive outside, unconnected from the web. That's it. Is that just the distinction?
Simply, yes. It's offline. Yeah, it's not connected.
It's just offline.
Anytime. Yeah, it's just offline.
In a freezer.
Actually have, you can control that. And again, as an advisor, there's a lot of interesting things there, from an estate conversation and trust conversation that other folks just don't have to have. But even from, now here's the other piece. No one talks about this, especially on our side, is insurance. I've had conversations with Backed, Gemini. What is the insurance piece? And to that point, is the insurance, okay, you have $200 million insurance. Fantastic. What is that $200 million cover? Is it 90% to the hot? Is it 10% to the cold? Who gets priority there? Guess what? If you're an individual investor or you're a financial advisor, institutions are going to get protected first. That's just the way it's going to go. The institutions are going to make sure they're going to get, full insurance, and they're going to be covered by that. Retail, not so much. But I've had to really dig into these conversations. Like, what does the insurance cover? Where does that go? These are conversations that are not being had. As fiduciaries, we have to have that conversation, which is why Fidelity knows right now we're going to stick strictly institutional, because if we open up Pandora's box with retail and advisors and that whole thing, because here's what the client's going to do. Okay, fine, Mr. and Mrs. Client, I think we're going to take $50,000 of your portfolio, we're going to put it into Bitcoin through whatever, Fidelity Digital Assets ETF, if that's ever a thing. You know what that client's going to say? Okay, great. Is it insured? What happens if it goes to zero? Is there FDIC insurance? And that advisor is going to go, right? So we have a long way to go with custody on the retail advisory side. On the institutional side, it's more robust, but there's still that issue around the insurance and what is covered versus the cold versus the hot, right? What type of, the account structures and things like that. But it's very interesting when you look at the options that are out there. Again, Shaun agreed. It's like Gemini is high quality, but for me to explain that to some of my colleagues, they're just not going to get it. And they're, how old is this? I think 2014, 2015. It's like, I'm not putting my clients' assets there. But Fidelity is immediate, is immediate trusted source, which is, again, the messenger matters here. In this space when you go into having these conversations.
To the insurance point, I think there's a distinction there. One is insurance against hacking, I would suppose, and then there's got to be a distinction between how the the custody was, but you were also mentioning insurance against possibly if it goes to zero sort of thing. I think those are probably two separate conversations, right? FGIC.
Well, I think he's talking about custodial insurance,
right? The custodial insurance side of
investment
it.
return.
Yeah,
Right. I'm just saying a client now is not going to care about any of that. They're just going to say what happens if it goes to zero, right?
Yeah.
But yeah, most on the custodial side is just simply that insurance coverage, and again the ability to buy more or whatever that looks like, to get a State Street or Prime Trust or somebody in. I've had hours and hours and hours of conversations behind the scenes, and they're just not ready to be the link for advisory and asset management to come in yet.
It's truly a pervasive issue, right? Custodial certainty, whether you're talking about futures commodity merchants going belly up with client money, as well as over the centuries, banks going having bank runs. I mean, this is not particularly new. It's extremely important, especially in a frontier asset class where you have sort of minimal history and experience, and it's such a unique asset class, as you alluded to, right? There's this what did you call it? It's the possession bearer. It's a bearer asset, right? So a couple questions here. One question we've got: what do you guys think of about decentralized finance, DeFi? Some major players are offering 8 to 10% yield on stable coins, but it's not exactly risk-free. How do you evaluate that risk reward, or do you? I don't know if you guys look at that or don't, but
I've been digging into it, and you're basically taking counterparty risk right now. It's a very strange animal to me that you're going to over collateralize account to borrow some cash. I understand where people don't want to sell crypto if they're up. They don't want to pay taxes, so they borrow against it. These yields are kind of unique, right? Like,
so can you explain it a little bit more? Even I'm a little bit foggy on this, Shaun. So is this sort of like a margin account for your brokerage, where you have X amount and you can borrow from that amount? Is that sort of what it's like?
$150 worth of stable coin or digital token, borrow $100, so your account's over collateralized. You've given up the keys. Basically, you've moved that crypto over in many cases, and if you broach the collateral level, or if volatility exceeds a level, they can sell you out, kind of BitMEX like. Coming from a credit background, we say like the road to hell is paved with reaching for yield.
We had a whole chapter in our book on that. It was just one page, big letters. Don't.
These yields are extraordinary. I don't know whether they'll last, but I'm not an expert yet.
So what are stable coins exactly? Because I've read a little bit on them. And so how would you differentiate a stable coin from Bitcoin, Ethereum, or any number of those more well-known cryptocurrencies?
So I'll take that and also answer the first question. I'm super excited about DeFi. It is a house of cards right now. But I think what you're seeing on DeFi is the future of finance being built on the Ethereum blockchain. Again, there will be a lot of projects here that are going to fail. But when you look at borrowing, lending, insurance, investment, all these things, Dharma right now is the most impressive thing, what they're doing. I would encourage everyone, just download the app just to look at it. It's incredible what they're doing. And then you also have to understand here is that the crypto space is missing its iPhone moment. It needs its iPhone moment where everyone just goes, whoa, oh, that's what it is. It's very easy to use and it's beautiful. Dharma is inching us there through decentralized finance, right? You can transfer money, you can buy Ether on there, you can collateralize it. Again, Argent, there's a few others out there, but it's a beautiful experience. The yields are crazy, right? You're taking a lot of risk, counterparty risk right away, smart contract risk. There's a lot of risk that you're taking, but just to be very careful. And again, I've had a client that literally collateralized ETH into DAI and paid off, forgot what the number, almost $100,000 worth of student loans, right? So it's working for folks that are very well versed. I sat with a prospect that had roughly $3 million. If he never wanted to, he would never have to touch the traditional banking system again. Everything was run on Ether, and he was showing me his portfolio. And it was remarkable how he completely removed himself from anything in the traditional market. So what's impressive was being built there, still very early, house of cards. I would encourage everyone to read more than you actually do, and just take a look at Dharma and look at that. That's where it's going. Now, to your point, just like all things here, I think cryptocurrencies is a bad name, kind of like stable coins, right? Crypto dollars, which someone, a very prominent name in the space, Nick Carter, is trying to rename them. It's crypto dollars. And they are simply, the difference from Bitcoin is they're just simply, now they were made to be stable, right? To simply transact and move value as a dollar on the blockchain, right? Essentially, right?
There's a peg on it.
Right.
Okay.
Yeah, and there are some that are fiat backed, and there are some that are collateralized, right? So I could take some of my Ether, I could collateralize that and turn that into DAI, which is a type of stable coin, or I could use something like a USDC that's backed, right, by actual dollars and other things. So the goal is for both of them to have a stable value, but it all, again, tech savviness, goals, all these other things depends on how you actually would use crypto dollars or stable coins, right? For advisors and asset managers, you probably want to stay more towards the fiat backed. Some of my clients and people that are more tech savvy want to get into the synthetic collateralized type because it allows them to do so many like that. Like you get crazy leverage and do all types of stuff depending on what it is you actually collateralize and what you actually use. Also, for financial advisors out there, be very careful because DeFi taxes for your clients is a nightmare. They will ask. I just posted on Twitter, I got a DM, this advisor panicked, right? Not only did he not understand what basic attention token was and Ether was, but there was just all these in and out trades or whatever. And I'm like, add some crypto accountants to your centers of influence immediately. So the taxes there get a little crazy as well. So, but yeah, I'm a big fan of DeFi, and I think moving forward, that's where the future, especially of financial services, is being built.
Interesting. Another question is, do you think that Bitcoin market dominance failing is something to worry about? Ooh, I'm not sure. I'm not sure the context of that exactly, but take it as you will.
Yeah, not me. I love Bitcoin. I think that over time, it's just going to pull away and away and away. The problem I have with a lot of other tokens that are built on projects or ICOs is they have some of the worst governance structures imaginable, right? It's like, okay, this company wants to raise money to build something out. Let's give these guys all of the money they ever thought they would make up front, and let's see how that goes. Right. And then you get an Instagram of a guy driving a Lamborghini in Mongolia, right? Like, okay, well, I guess lesson learned, right?
Yeah, you don't want to have a Lamborghini in Mongolia. So Tyrone,
that's the lesson. That's the lesson right there.
I see you nodding along. Is there anything else you want to tag on to the end of what Shaun was saying there? Because I saw you nodding along pretty hard on that particular point.
I just that I agree. I agree wholeheartedly. Not much to add there.
Okay. How about velocity coins or velocity tokens? Someone was mentioning this to me the other day. I hadn't even heard of it before, and he'd also
my head.
Right. All right. So yeah, not for this conversation. And I also heard that they have a couple of them backed by gold and silver. So a couple of tokens backed by actual precious metals. That struck to me as
I mean, digital tokens based on gold have been around and tried for a long time, and it didn't work so well for the last guy. He ended up in jail. There are some innovative ideas where the token would be based on a pool of, for example, T-bills. Say 80% T-bills, 20% 5 years, and then the remainder being like a pool of high yield. So your token is actually generating interest. Now, that's interesting because, people that work in cash management, they move cash between corporations and banks. But here, and then they reinvest it. They're like, okay, we'll take in $3.5 billion from a European entity into Canada, and we'll pay you whatever 30 basis points in interest per annum. But now, if they're, instead of moving dollars, they're moving a token, that actual token, which is a payment mechanism, is also the investment. And that's a really interesting idea.
I'm going to throw a couple of provocations at you guys based on that. I mean, one of them is just that all these different acronyms for collateralized assets based on tokens, hints of the last great financial crisis a little bit. There was a lot of that going on, financial engineering. So just an initial thought. And the second one is, if you're backing all these tokens with stuff that's in the system, be it fiat currency or precious metals, or even these more exotic assets, isn't that somewhat defeating the purpose of this hedge against the system, or this protection against the dollar itself and the dollar-based economy to some extent? What are your thoughts?
So to start where you just ended, no, because you are still operating outside the legacy financial system, right? So the whole thing with DeFi now is, again, decentralized finance is, there's very little KYC AML. Take that as you will, whether that being good or bad. I think we all agree that's not the best thing, but they're starting to integrate more of that. And that's where folks get a little itchy and be like, well, it's not really decentralized anymore. And there's some projects, again, that are completely algorithmic, programmable money out of the system. And then there's some that are still tied, right? Because again, even Dharma, you can link a bank account and things like that. And then, but again, these are on ramps to just allow you to get away more from the legacy system. And what was it? Remind me, what was the first part of your question that you asked?
No, I was just talking about all these collateralized ideas behind tokens. If that
like 0809.
Yeah, like a bubble-like feeling of people adding leverage onto the system and tacking on different layers that could potentially become. I'm not saying that's where this is now. I'm just saying that.
It's there, and it's happened.
Oh, so there it is.
In March, again, the House of Cards fell. The MakerDAO, and not to get into all that thing, but there was a big issue with the collateralization of the assets, and then the price drop in the market, the 50% price drop. So it happened. The beautiful thing, though, now is I think what we saw even coming out of 0809 in traditional markets is what we experienced this year with banks being capitalized, at least, so they're telling us, right, capitalized well enough, and they could withstand any macroeconomic shock better than they could then. With DeFi, I think it's going to be the same thing. I think they learned that lesson. Again, it's still the wild, wild west of who can write the better algorithm. But I think as they continue to fail, as they get stronger, as we get into Ethereum 2.0 and the blockchain, starts to be more developed in side chains and all these other things, it'll start to become more robust. And it'll have a stronger foundation than it does right now. But the experimentation and everything that they're doing is very similar to that. And you saw right away, you get a 50% drop. One of the most, prominent project in the space failed to do what it was supposed to do, right? Going back to governance, as Shaun mentioned, and a lot of these other things, they're going to figure that out, right? Because again, they're brilliant. They're just tinkering, writing code, monetary economics and fiscal policy and all that stuff, completely foreign to them, but they're learning that right away, right, of how that works. And just really quickly, that's the beautiful thing about Bitcoin. That's all built in. The monetary policy, the difficulty adjustments, and that's all embedded in the system. It's beautiful math of how it works.
It's interesting because there's a question earlier on about, I think blockchain, does that mean money? What does it mean? What is Bitcoin? And so all of this conversation is really sort of about the various applications that the concept that a blockchain, a distributed ledger, will achieve in so many different domains. And I think as a simpleton in this domain, I think of it as sort of the invention of the internet back in the early 90s. There was no way we could imagine how that was going to transform the world and how it would be used and what the applications would be. And I think, from a blockchain perspective, you've got contracts, you've got currencies, you've got the ability to interact between those contracts and currencies. You've probably got logistics items that you can cover. We really probably can't even imagine all of the use cases that will represent themselves over the next 20 years. I think that's the thesis that you would have to believe in at the beginning in order to, in order to jump all in as you two gentlemen have on this topic. You want to add anything there? Because I just wanted to cover that one question that was earlier on about, the difference between blockchain, Bitcoin, and the different types of. Any further clarity, I'm sure, would be welcome.
Well, blockchain is just like a very, very slow but secure database structure. And it's only when it's distributed across this massive, decentralized network does it have value beyond, frankly, Microsoft Excel. Mm-hmm. Right? It's only, and that was the brilliant turn that Satoshi Nakamoto figured out. It's like, we're not going to pay people. We don't have the money to actually pay people to run this database. But if they'll do this proof of work, we'll pay them in a token that over time, we hope will appreciate in value, because the work they do now and in the future makes that database secure. And as it grows in value and it can be used as a trust machine to transfer value, people will want to use it for transferring value. Like we've done a bunch of trades in the last few days, and right now I monitor the blockchain. I just saw a trade go by for $176 million in the current mempool, right? Like the amount of value being transferred on the Bitcoin blockchain is just astounding, right? I'd encourage anyone to go to tradeblock.com, click on Bitcoin, and see the actual blockchain being like hammered together in real time. You see the transactions on the lower right, you see the blocks being formed. It's an amazing thing to watch. And then when you go to a website like BitNodes, and you see all of across the globe, all of these flashing dots where nodes, which are not miners, but they're people that are basically contributing hardware and electrical power towards keeping the blockchain safe. But I've said this before, like the Bitcoin and its associated blockchain, in my opinion, is the most egalitarian effort of humanity. Right? When you look across the tens and tens of thousands of people that have reviewed the code, like maybe hundreds of thousands of people that have reviewed that code, that have improved it for no payment to serve as a decentralized system where nobody, can get paid the way that people get paid in the traditional centralized organization. It's astounding. It's amazing to me. It doesn't matter like who you are, what you look like, where you were educated. If your ideas are good enough, they bubble up through a process of people that have proven themselves technically.
Yep.
And if your idea is good enough, it will get implemented. That's fantastic.
Yep. Open source. Absolutely.
Mm-hmm.
Yeah.
Absolutely.
So there's certainly an energy component to that, and an energy component to that. Someone's asking, is blockchain an energy hog? You can comment on that. And then secondly, what happens when all the Bitcoin is mined? What is in it for the distributed work environment to continue to track things like in 2044? Like what happens then?
It's a great question. I'll
Yeah, I mean, we're speculating, we're having fun, thought experiments.
Yeah, only because there's a really good piece. I'd encourage whoever this is that Nick Carter just wrote on about the energy that Bitcoin uses, and I think it's a really illuminating piece about how much of it is actually renewable, about what how it's fruitful, the energy that it's used to create something that is as hard and demonstrates so much value. I don't really get into that much. That's not my argument, but I think if you read Nick Carter's piece, he illuminates very well why a lot of that is bunk, right? And he kind of fixes that, argument. But I don't know if Shaun has thoughts on that, but that's my feeling on it.
So on energy, or recently somebody said that Bitcoin annually uses as much energy as the United States uses on Christmas lights, or it uses a fraction of the energy used by the global gold mining industry. And whatever it does use, remember this, somebody's paying for that energy, right? And if we're going to believe in a capitalist market, and maybe it's not, maybe some people are levering off of free energy in different places, but at the end of the day, somebody has to pay for the energy, for the hardware, for the real estate, for the HR to maintain that. This is not something that gets created out of thin air. So whatever people are paying for energy is worth it. It's
right. It's creating a value.
Right.
It's creating something of value.
Yeah.
Right. What, Greg Voss?
To your second question,
Okay,
I guess. No, Mike, I was just curious, the second question that you asked, and Shaun, Tyrone, what happens when the last mining runs are completed? You said 2044. I don't know if that's in fact the exact date.
2140, and then
whatever happens.
Yeah, the idea is that the transaction fees will make up the revenue for the miners. And remember that right now there's over 9,000 nodes running, where people just maintain a blockchain on their own node to make sure that things are secure. And so I expect that that's going to increase over time as well. And if we do look at layers on top of Bitcoin, like Lightning Network and something, your smaller transactions will occur there, and they'll get aggregated up and then settled globally on the blockchain, because it will be expensive to do things on the blockchain going forward.
Interesting. So we talk about 100-year time frame. Then what's the chance that does quantum computing eventually, or do quantum computers do all of this? I mean, now we're getting to sci-fi a little bit, which is a little fun.
I thought so at first, but when I really looked into it, and again, not an expert, but it just seems to me as a bit of a red herring, right? Like, you got a 10-minute block time and the amount of what you have to reverse, and then people are like, well, we'll just use it to crack SHA-256. SHA-256 is pretty hard, and but maybe by the time that those entities or those computers are functional, we'll be at SHA, like a 10 multiple of that.
Right.
And you're talking about the energy to spin up a quantum computer is pretty high.
Well, yeah, and I think, yeah, you make a good point. It is a bit of a red herring. Like, look at the system we're running on. Does that have some problems and issues?
Yeah, you think that your credit card will be secure, your bank account.
Right. I got it right now. I have a 4-digit PIN. So I don't know. Yeah, it's probably a red herring. Yeah, Greg Voss also asks, what market cap do we think that Bitcoin can achieve, given, let's say, gold as a $9 trillion total market cap? So in the context of an asset class, now backing out of we're deep into our fingers into the mining and the proof of concept, but backing it out and going, here we have a $250 billion market cap asset. If it proves proof of concept, like we've talked about, what's the potential for that growth? Does anyone have any thoughts on that, or dare to make any? I mean, obviously, you gentlemen have made pretty big investments in this, and I mean that in the way, just when you put your own personal careers into something like this. So I'm thinking that you guys are going to have a pretty good number on this, pretty high number, but And I do accept that you would have some bias, but I still want to know.
Skin in the game bias, is that what you call it?
It's skin in the game of career risk.
Yeah.
I think so. I always tell people this way: when you look at market cap, again, I don't know if that's the right metric to gauge it on. We're doing that now. So let's just say. So this is what I said. Overall, when the entire space, right, and there's still a lot of junk that has to die, but when the entire space gets somewhere around $1 trillion market cap, now you're cooking with grease, as my mother would say. But before that, I think a couple of things happen. When we even wink next to new highs in Bitcoin, all hell breaks loose, right? And you're going to see a lot happen from the institutional side, from retail, and so we'll really see what happens. So Bitcoin could jump, in market cap itself to the full market cap of where we are right now in the entire space. So
that's 100% from now, right? Because the high was 20,000 ish, around there. Yeah.
Right. So again, I feel like we can get into that. I don't know if we approach goal, but again, I just think the benchmark that I said is let's just get to $1 trillion in space overall. Now you have something that's viable. It showed some length. Again, ETH is still really young. Bitcoin is still really young. Let's get some, that Lindy effect going, right? And then we could talk about bigger, longer term time frames and more research and numbers. And then that market cap number will come. But if we just get to $1 trillion of overall value in the space, I think you'll start to get really heavy hands that are like, okay, this is going to be around. We can, more financialization of the space. Yeah. And then you go from maybe a trillion total to, again, Bitcoin getting up there in that number itself, and then approaching, that market cap for gold at some point.
It only took Amazon like 20 years to do that.
Right. Exactly.
You think about and I think the stat is there was 90% declines in Amazon on the way.
Yeah.
So I don't the volatility is something that's why I think at the outset you gentlemen talked about what's the position size initially. Well, for someone who's unfamiliar, it's small. And then Tyrone's conversation is totally different. Like, 90% is a little high. You should probably diversify.
I'm going to throw out that like 3 trillion, right? Let's get through the next halving, plus a year. When you think about what has more utility to human beings on the planet, Apple, Amazon, that are $1 trillion plus companies, or a global means of payment and savings that addresses all of humanity. I'm going to say like a third of the value of gold, and that'll evolve over time as people become even more and more comfortable with it.
And then just one follow on that. How do you think governments evolve? Because we do have to pay some tax at some point. Like, I get there's this whole world of the crypto space, the libertarian side, but there are social programs that we have to fund. And so when you take things off book, so to speak, like are governments going to be participating in this and taking their portion of that in order to spend on various programs to fund, whether it's education or, better living or healthcare? Like there's a whole number of things that government serves a role in, and we'll all take a varying degree on how effectively they do that. And that will be, that'll be also the jurisdiction that we live in, and all kinds of stuff going on today 100%. In that realm. So we're all going to fall in. But how have you guys given some thought to that? Because that's something that I look at that and say, I don't know how that manifests. Maybe it's super easy and that's just how it happens. But any thought been given into that in the greater sort of crypto space with you two gentlemen?
So for me, right here in the US, Bitcoin is considered property. And the government now wants to know if you own it, period. You're holding it, you trade it, whatever they want to know. Also, there's no wash sale rule, which is interesting. But any capital gain, again, is taxed, right? If you sell capital gains, it's taxed. So, and I think that will be the majority of folks that will pay taxes on it. There's going to be a small subset who opts out and want to be completely libertarian and go to jail, right? But I do think for the most part, there is a tax planning around the conversation around it. If you're a financial advisor, again, for those who hold a large position, want to borrow against it, what goes on there, DeFi, folks who even trade in and out. There's a lot there. The other thing is, being able to reconcile your losses, right, versus your stock and things like that. So it's a very interesting tax conversation, but the government is going to get theirs for sure. Especially here in the U.S. Again, like you said, what they do with it is a whole nother story. Right. But they're definitely working to get theirs here.
So I'm going to quote Mike Novogratz on this. He's like, "Pay your taxes."
Right.
And then I can tell you, like, I did a certification as a crypto asset investigator with CipherTrace. And it was taught by a woman that spent a fair bit of time working for a 3-letter government agency. Like, if you don't think they're going to find out what you're doing, you really got another thing coming, right? Like, everything can be tracked, other than, say, stuff that is like coin joined or is in ring signature type of currencies. But I mean, God help you, at some point in the future, you're crossing a border and you have a Monero balance on your phone. They scan your phone, oh, you got a Monero balance. We're going to talk to you over in this room now.
Right. Well, it's like the $10,000 you're crossing the border with. Maybe I guess I'm coming back at it from even. So I get that part, pay your taxes here, but I'm paying my taxes, let's say, in US or Canadian dollars.
Right.
If it's a currency, does the government ever, because part of the play or part of the attraction here is that it's not diluted. So I suppose what you're saying is it's sort of like gold. If they want to print as much money as they want, let them print it. This is my bank account. This is where I'm going to hold my money. Mm-hmm. And you can print as much of that as you want. And I'm going to enter that world of currency, whatever fiat currency you're in, wherever I might be. And I'll use it and spend it. But really, I'm going to hold the stability. Is that sort of the first 50 years?
Probably, yeah. Again, Bitcoin has to evolve still, right? So the largest hands, the whales, so to speak, at some point will be incentivized to move away from it, right? And there's some tax implications there. There's some, divestiture and reallocation of assets. So, and that's going to happen at some point. But right now, again, that savings mechanism, that store value type of component is very compelling. But there'll be a point where Bitcoin evolves and it becomes much more part of, our everyday life, and they'll be incentivized to do that. But yeah, it's a really good point. Agreed.
Yeah, it's the whole idea between low and high time preference, right? I guess everybody that's holding it now has a low time preference. But I kind of wanted to circle back on something we were talking about earlier in the conversation, that using what Mike just said now. Is it gold? Is it currency? So you deal with people that maybe have 50, 60, 80% of their portfolios in crypto, Tyrone. But if you were to say, okay, for instance, let's say average investor is already thinking outside the box a little. Maybe he's holding 50% equities, 30% bonds, a little bit outside of the 60-40, and 20% in alternatives. What would be the range for a more risk averse to a more risk tolerant investor that you would say, and where would you carve that portion out for you to position a wallet of crypto? And would you diversify it, or would you hold particularly Bitcoin? How would you position that for the average retail investor that's starting to consider it for a portion of their portfolio?
It's funny. I've taken a controversial stance on this. I don't get the whole 1% allocation thing. I mean, I get it, get off zero, but if you really care about an asset and you think it's going to do what it's supposed to do in your portfolio and you have conviction, why only 1%? Now, I understand why the Novogratzes of the world and those folks would tell financial advisors that and others. I completely get it. I don't have anything to sell them. So I say, run the models, right, of 90% cash, 10% Bitcoin. Run the models of, again, Jeremy Siegel just came out and said the 60-40 is dead, right? Like, take a little bit of that 40 now, and maybe it's 15 into Bitcoin. And again, he hated gold, but now he's saying there's some interest in gold now. And I just retweeted a podcast they did. I'm like, take out gold and put in Bitcoin here. So that matters. So I feel like if you really have conviction and you're having that conversation with the client, I would feel comfortable maybe in that 2.5–5% range if you really have conviction. And again, how are you going to classify that? What sleeve is that? Is that the alt sleeve? You got to figure that part out. But I just never got behind the 1% allocation. Now, again, for larger investment managers, that's significant. But for what I do, 1% is like, what are you doing?
Where would you carve out of the portfolio? What would be your recommendation, or at least what's the framework that you would use?
Whoa, easy on the recommendations. If you were speculating on
right.
You woke up and you had something came out of your mouth that you weren't responsible for anyways.
If I just accidentally, no.
Yeah.
Here's how I frame it, right? This depends on the advisor you're asking. For me, my clients are very young. So that bond piece is already very small, if anything. So you're probably taking away from that equity piece, right? It's not going to be, let's take away from your T-bills or your corporate bond portfolio. It's probably going to be, all right, you own enough Square, right? Or you own enough Slack, right? How about you put maybe 5% here? So that's how I would look at it. But again, I think a financial advisor deals with retirees.
That's a great point, Tyrone.
Conversation.
Yeah, it's a great point, Tyrone. And I'm gonna just jump in and flip this over to Shaun, because you mentioned something to me, Shaun. We were having a conversation probably a couple of weeks ago about how some tech funds are actually looking at Bitcoin as an investment in their space, because Tyrone mentioned, hey, Slack and so on, and Shopify and on Spotify and all the shops and spots.
Yeah.
but maybe you can, Shaun, you can give some more insight on that, on what you're seeing on that side for you.
Right. Like these tech guys are going back to that framework I talked about before. What is like a technology based platform deliverable through mobile devices to the entire population at once, right? And you can think about Uber, Slack, Square, the pivot that Facebook made to mobile, right? It's like, that's where you're going to get a lift, where now you're addressing 7 billion people at a go. Why is Shopify worth more than any of the Canadian banks, which make more money than anyone knows what to do with, right? It's because they can address a global market essentially through a mobile phone using software.
Software eats the world. Who said that? There's a
Mark Andreessen.
Software eats the world.
They're big into crypto now. They have a crypto fund, and that's what's going to happen. I
got to up my allocation immediately. Damn.
It's like, one of the things about that became obvious to us when we were putting our product together is that it's tax compliant. Right? It's like you have the exposure to Bitcoin, but it sits in your account as a stock, right? Not only do you get like all of the industry insurance funds like CIPF around, if your broker goes down, you're protected, right? It doesn't protect the asset. It doesn't protect you from the asset being volatile or going down, but it's now an infrastructure that makes it accessible to a lot of people, and they don't have to think about the taxes. Like, one of the challenges I had when I went crazy getting into this was I probably had like 12 or 15 different wallets. Mm-hmm. And then I'm moving stuff between them. I'm trying like Abra and Shapeshift. And every time I do that, I'm actually incurring a tax position. But like, I'm like, okay, well, it's like a few $100 and then I'm just not going to worry about it. But it is a challenge when you're trying to do things now in size.
Yeah, I feel that, and I'm feeling like I'm underexposed now. But I think honestly, what's happening in the world is that you said it perfectly, Tyrone. It's get off zero. So how do you get people off zero in this in this environment? Certainly, what was funny was when it was hitting 17, 18, 19, $20,000 Bitcoin, I was getting calls all the time.
Yep.
And it was classic bubble behavior. And I just said, no, it's going to have a 90% correction. Just when it's down 90%, buy some, but don't buy it now.
Right.
And it's just that sheer luck. It could have gone to 40,000 before it went down. At some point in that moment, you're kind of you're in that bubble environment, and you can kind of feel it. And you just said, wait. It went to whatever it went to, 2,000 or 3,000. Nobody called. It's kind of like, well, if you wanted to take a poke at 20, at 2 is probably better.
Right.
Nah, I'm good. So it's interesting, the sort of the overwhelming human behavioral draw. But I think, this has been a great conversation about the ins and outs, the potential for this to have some pretty significant upside, the potential for it to be quite a diversifier to portfolios. I don't know, Richard, did you have a chance to talk about just how, short time frame, but how it's quite different from gold, stocks, and bonds at all? Did you share a lot of that or no?
I mentioned it very briefly when you went to the bathroom. That's right.
Yeah. Okay. So, so here you have an asset, frontier asset, albeit, but a very different asset. I think it's a different group of owners. Generally speaking, those owners that own that asset class are quite different than the owners that are owning your gold, your stocks, and your bonds, which definitionally should probably provide a different stream of returns. Except in the liquidity crisis, everything goes down in the liquidity crisis. And the last one in March, even U.S. Treasury bonds went down in the liquidity crisis. So there are times when everybody panics, and that's fine. But it certainly makes I think we made a pretty compelling case, and I think in Canada in particular, you have a very broadly available prospectus-based product for people to buy that's listed on the TSX, which even as I hear you talk about things, Tyrone, and trying to get things set up, you don't quite have that available on a broad-based prospectus product that you could have some faith in and that would qualify for insurances and things like that. So it's a bit of an advantage for Canadians.
Yeah, you guys are ahead of us with a bunch of this stuff and other stuff. But yeah, it's just reading about, the fund and everything, just in some research, I'm like, man, right? We just can't get over the hump with it. But I think we'll get there eventually. Folks in the space here are excited that Clayton is going, stepping down and being removed. So they feel like we'll get an ETF, over the finish line soon. I'm not excited about an ETF, but again, I get it if I'm a fund and everything else. But for retail, for advisors, I don't think it's the best thing. I think some type of separately managed account structure is better. But again, it will, it'll be good overall for liquidity purposes and price discovery and access, right? So we do want those things. I want to make that very clear. But the fact that, financial advisors are like, give us an ETF, give us a Bitcoin ETF worries me a little bit. Yeah. But that's a conversation for the other day. But we'll get there, though.
Fair point.
Yeah.
Well, anyone got any closing remarks? Did you have any other questions, Richard, or anything else on your list?
I think we covered a whole lot of ground here today. It was great. I learned a lot.
Me too. I really appreciate you gentlemen taking the time to be with us today, and
thank you guys.
Enjoy a little happy hour and some riffs, and I think there'll be an opportunity to do this again at some point down the road, and
we can all get together and do the feats of strength again.
Yeah. Yes,
that's right. That's right.
Yeah. Well, don't let Tyrone he'll take you to the track. I don't know if you ever have gone to the track, but sprinting is one of the most demanding. If you haven't sprinted for a while and you go sprint, you'll be catatonic. You'll be in a body cast.
Yeah, absolutely. Sprint is a heavy deadlift.
Yeah. Well, I have to get to the Banya after that.
Yeah. It's great to meet you, Tyrone. Shaun,
nice to meet you.
Everyone out there, like and share. Don't forget it.
Yeah, absolutely. That's right. Subscribe, like, and share, all that good stuff. And appreciate you guys. Thank you so much.
Thanks for taking the time, gentlemen.
Generous with your time.
Have a good weekend.
Thank you.
Thank you. Bye.